I fully stick to the view that we should remain data-driven and meeting by meeting. We have good news on inflation, coming down quickly and still more quickly than expected. We were at 1.7% in September, which is very good news. This gives us some room to ease rates, and we decided a rate cut unanimously last week. For the next future, I would completely follow Christine Lagarde's assessment yesterday, saying the direction of the journey is clear. We will probably cut rates further, but the pace will be fully pragmatic and data dependent.
What is the prospect of a 50 basis point rate reduction at least being debated in December? Because it does feel like 50 is now the new 25. Bank of Canada went with 50 basis point rate reduction today. Federal Reserve's also done the same. Should 50 be a matter of debate?
Can I only say that the ECB is independent in its decisions, so we are driven by European data. And if I may stress, we are on October 23rd today, so what we will decide in December is a completely open story with full optionality.
Doesn't this leave you behind the curve if you're now meeting by meeting? Because typically central bankers used to look down the line and make forecasting statements and trying to set policy for the future, not jumping at every piece of data that comes in at a meeting by meeting basis.
No, I don't think we are behind the curve today, clearly. We have this very pragmatic approach. Can I remind you that we started to cut our own rates earlier than the Fed, early June. We already cut rates 3 times, and we will see for the future. So I think it's a balanced approach. And then we look at the inflation forecast. We also look at the growth forecast, knowing that our primary mandate is about price stability. Our commitment is to reach 2% inflation target in a sustainable manner by next year. And believe me, we will deliver.
At what point can you declare victory against inflation? Are you getting close to that point when you've had a 1.7% level below target?
No, we shouldn't declare victory yet because there will be up and downs in the inflation data, but I would say that we made very significant progress on this disinflation path. So victory is in sight, but we shouldn't be complacent. And this is why I sustain this pragmatic approach.
If there's a situation where you're looking at back-to-back moves at every meeting, doesn't it become imperative to get quickly to neutral if the scenario is showing us there are more downside risks than upside risks?
But we said from the start that we were meeting by meeting, so the October move shouldn't be a surprise. We followed this meeting by meeting pace. It doesn't tell the pace we will follow in the future. Again, we are data driven, but I think we are well on track to put it in a nutshell. And this is good news. Disinflation will bring more real income, more purchasing power in Europe, fostering consumption and growth, and will give some space for easing monetary policy as we started.
A soft landing is what Christine Lagarde is talking about, but how confident are you that it can be achieved?
I think we can have a reasonable degree of confidence. Karen, remember 2 years ago, there were many fears on both sides of the Atlantic that we would have a recession and that the so-called sacrifice ratio, so the price to pay in terms of growth for coming back to the inflation target would be very high. It's not the case. And by the way, I think that our past credibility played a significant role. Because we were credible, inflation expectations remain well anchored. And so the level of interest rates in this last episode of disinflation was much lower than, remember, 50 years ago, the Volcker episode, to give an example. But credibility was also built on our resolute action. When it was necessary, 2.5 years ago, we raised rates at a rapid and significant pace. So this is why we are credible, and this is why we are achieving, we should remain cautious, a soft landing.